weekly Dow Jones. What I have here is a weekly bull top, and let me show you how bull top this is. It's bull top enough to know that we come down and we finally, within this bull top reversal, price exhaustion, as I've clearly stated. All of the indexes have come down, and you can see the amount here right where it hit that 10-week moving average in that high electronic frequency computing machine, walked it right back up here. However, what I would like to point out, and a lot of people that don't understand high frequency and how it works in the actual exchange model, you're probably thinking, well, what does that mean? Well, get to know us and we'll explain it to you. This is where they came in at that support level. These were the weekly areas within the bull cycle right over here on the Dow. And we hit this very narrow range week right up here at the highs of, guess what it was? I can tell you right now, 13,055.75. This last week's high, as of the closing of 3/11/2012, that weekly high is 12,977.34, which is a lower high. That's that support level in that weekly moving average on the Dow. Now, in bull rallies, that's what the topic subject is, and there'll be lots of them on our new website, of course, which we'll be launching very soon. And within those categories, we're going to talk about bull runs and how bull runs started right there, calendar 2012, off of the, let's say the breakout was good enough to say when it held the weekly half bar back over here, but it started right here, calendar 2012. So we're going to benchmark your trend line, Brian Plain, take the low of 12,221. That was the low for this move that we had right here, and we'll copy it to the clipboard. However, what I want people to know is that the calendar low for the month is that we're going to work off of the number 12,221.19. Now, the calendar high for January, the closing high, the high of the week there was 12,869.95. And there was a high at that point in the first calendar month. Now, when we start the new week out, we went from a series of highs during the week of 2/5 calendar week, 12/9/24. Then we started out at the advance was 2/12 of 2012, 12,967.92 is that high. Then on 2/19 there in February, the weekly high hit 13,013.82. These were the series of highs that led up to 2/26 that week. We hit 13,055.75 on the high. Now we've had our weekly decline in the week of 3/4 to 3/11, a whole calendar week there, 5 trading days. We have an intraday high of 12,977.34. So what that means, MMTs, is that that support level is right across this bull X right here. This the top of that weekly bar. It comes down, it hits it, and it bounces. Now, we can easily, in a bull trend, we can go higher on the Dow. And I can show you that there are resistance levels in the Dow up at higher levels. And we get back into to these levels back over here in the 2008 time frame, of course. 2007, we were here. We know exactly how markets made their tops. That's why we're talking about that if we were to break through some key resistance levels, we could come over here. That's going to be around 13,342. There are some pockets in here, though, that it's going to have to deal with, and that's going to be the 13,122 area. And not only that, there are going to be some micromanagement area that we're right here. That's 12,995. and we close at 12,988 or 12,922. We're right below it. I'm sorry about the confusion there. Let me blow up the chart. So upper resistance levels are always going to remain over here in these time frames in the 2008 period. Now, we'll use our own platform. I'm just showing you what it looks like on a weekly chart. And I'm also going to show you that when you had other reversals, you had narrow range cross, whether they're positive or negative. But look at, that's a kind of weekly reversal when you got really overbought in 2007 up here at that peak. This is 14,200 right up here. Yeah, let's show you. Right there, 14,200. Okay. We also have these highs here at 13,800. And we got down into 13, we got support levels that were 13,625. And these levels that were back here in 2007 are a major player for the current pullback in the Dow. Dow's 12,922.02. When you look back in time, you're going to find out that 13,475 is up above there. And you get down into these pockets and you start getting into 13,183. Right now, we're in this weekly bar of this downtrend weekly bar that occurred in the week of (12/30/2007). The high was 13,364. And we're in, this is going to be that upper resistance of that resistance level where the Dow, where the bull side of that Dow will have major challenges there. However, within this weekly bar here, there are lots of different key levels that the Dow is going to have to deal with. And what I want to make clear is that when we look at the current time frame where we're at right now, we can clearly see that that Dow's got that narrow range weekly cross there and support right across. See, these were the levels of the Dow bull rally right here. So the reason why we want to focus on this part, look at over here in 2011. These were the top reversals right here, MMTs. That's ultimately always going to be that those tops that trend line came to also hit that weekly moving average. And I'm going to blow up just this part of the chart for you on the Dow so that you can see right here, if we break these key levels of support, that the Dow would have to come down into the pocket on a pullback now from an overbought Dow bull exhaustion, as we're going to get down in here around the 12,585 area or somewhere in there. We'll use our platform to get the exact numbers, but these are going to be the key support levels, particularly in this one bar right here. This bar right here. This weekly bar. When did that weekly bar occur? Well, this was 115, a 2012 breakout bar. Okay. And you hit the dip, bam. So basically the Dow is testing that key support level. You'll also have other levels of support on the way down. Here's a 12,670 area. Just, if we break below the 10-week moving average, you can see that the next support levels on a really nice pullback would be to come right down in here and test the whole phase. Just remember, bull tops are bull tops. And bull tops have patterns to them. This one here, right now, we're going to be monitoring that this narrow range high, previous week high, right here. Here are the trend lines, but the reversal's in play. That narrow range weekly bar, look at that weekly reversal. And it only happens on indexes when they get extremely overbought or at multi-calendar yearly highs and how they bounce. Now, the wonderful thing about it is that everything has a support range, even if they're very high and overbought range levels, you still have intraday equity levels that will bounce from support, but the more overbought that those individual equities get, they too will have to pull back. And like I say, every good bull rally, we're expecting a good 4 to 8% pullback, somewhere in that neighborhood. But if you look at individual stocks, that could be 10 to 15% very easily from stocks that are at their near their 52-week high or at their 52-week high. You can't let them drop $10 or $15 off of those calendar 2012 highs. They're going to look like this Dow. So the Dow Jones, major support, bull is in play. We've got a narrow range price pattern that is holding, and here it is, right here. There's the magnitude of the bounce, okay? And when you got down to that first reversal of the year, right here, it was last week, we had a reversal, bull exhaustion. We covered it all week in our live trading, our live market making. Yes, we did. And we can clearly see that right now we're going to be, I'm just putting the trend lines here because the thing that I'm going to be watching for is how we break above here or how we break back down into this wick pattern. And if we next week, if to confirm that this is a reversal here on the Dow or any of them, you're going to have a big down week, and the next week's body is going to have to be lower than the wick here. So the Dow is in a top heavy bull exhaustion pattern in the Dow, and the Dow at multi-year highs that I have showed within the actual trend structures for the MMTs, going back into key areas in time, how the Dow will have that support level that come across these weekly highs that were weekly resistances that become new weekly support levels in the pullback in the Dow. And that this 4-week pattern, it was a 3-week pattern right here, this is going to be your support levels. And this was back in the calendar weeks. Let's make sure you understand that part of it. MMT right here, 7/30/2011. Remember this time, 7/10. Remember right here, 7/17 week. But here, it's these key weekly bars that when you pull back into the Dow from an overbought bull level, you're going to come down into this weekly bar and you're going to find support levels within that Dow. So as we move forward, stay tuned for one reason, because in every bull run, once you get that bull pull back and get to shake them out, we're going to be looking at where the broader equity market in individual equities themselves will pull back and follow the same kind of pattern. But they too, within their weekly structured trends, will have their key support levels. And using the Dow right here just to let everyone know where we're at and where these support levels are going to come from on the Dow Jones. Not only that, moving forward, as SMF is, we are expecting that exhaustion pullback is exactly what bull rallies do, but they have a behavior to them. And the behavior that they get is how do they get the highs? And there's the high. Here's the lower high here on the weekly. And once again, it's a pleasure for the MMTs to have a very high alert, because your training is in bull runs. How do you know when there's going to be a major pullback? Well, here, there's that trend line of those highs, and it comes right off of these lows that happened in 2009. And every calendar year, we've had these wonderful channels that go up, but they always pull back now. And you can see where they pull back in previous markets. Here's the one that we did here. We also did this one in calendar 2010. Now we're up here. We have all the live videos on the site with all the coverage. Well, and all the live entries and exits in all of these years right here. Okay. And so what I want to tell people is, once again, whether you're looking at the S&P 500, same pattern, whether you're looking at the Nasdaq 100, same pattern, same story, same exhaustion highs. We're totally overbought on a weekly level. We're 97% overbought on the Nasdaq 100. I said it could get to 97, but I'm also telling you right now that there's going to be a lot of problems with this one moving forward for the bulls. That means that we're, within 2 to 4 weeks of a fairly decent size, good correction to shake them out, come back down here. What took us up in a very short period of the calendar high of 2012, 310, 2012. Here's that Nasdaq 100 right up at the top, right up at the top, right up at the top. I'm going to tell everyone too. S&P 500, same way, right up at the top. S&P 500 can get up there though. We could break through these highs back up in this 2008 pocket, hit that 1400 area, and here's that upper resistance on that, right here, 14. I'm going to draw it for you. There you go. So you know that these particular levels, MMTs, are going to be our upper we would to get there from here right now is going to be very difficult. But that I'm just telling you that these major areas in 2008 at this particular topping pattern during this time frame, April, May, June, all back at this time frame is where this upper resistance levels are going to be. But right now, they're going to have to deal with this, what's in here. So as we move forward, everything is overbought, and everything is overbought. So I'm looking for a 4% to 8%, 7% correction in the indexes between now and the next 2 to 4 week period. We are also going to look at where the key support level is in leadership stocks, how they'll bounce in this bull channel as we move forward. We're coming out of a seasonality period. We're going to be completing the first full 90-day trend on all of the key indexes. So that's what SMF is looking forward to. Remember one thing, though. Bull rallies can continue to stay at peak levels for an extended period of time. It's always possible. However, a master at market tops, and we called the last one in calendar 2011 right up there at their very tops. Go back to the videos on stock market funding. Take a look at May of 2011, end of April there. We were going through the same things. Markets were different then. Right now, they're quite different than they were then. However, every bull run has a bull exhaustion pattern trading range and a reversal to lower support levels to let the new buyers get in the bull rally. It's early in the tooth for 2012. And once again, we're just going to end it this way, and that's the SMF forward-looking 2 to 4 week topping pattern ranges monitored on a daily calendar level. See you there.